ZB set earnings for the week of 5/20-5/24.
That's funny as fuck. So I couldn't get the stream up in time to catch the move in the morning, but if you look at the stream, you'll see I caught this move off a pre-market high on SPY. We had a huge move up, momentum. Had a lot of momentum this morning. A lot of people thought they were going to get short on the day, or it was going to be a choppy day. You just got to go with what you see. You can't have a bias. You just got to play what you see at the end of the day. Wait for your setup. Play your setup. In this instance, our setup presented itself. We played it and we capitalized off of it, and we were done 22 minutes into the market, up almost a band. And it's just all a process. This is taking a lot of time. I've been trading for 4 years, and now I'm using prop firms to capitalize off of trading as of right now. So I'm trading 2 PA accounts, and then over time I want to gather more PA accounts and build them and take payouts on them. I've traded options in the past. I've lost a lot of money, and I've also made a lot of money in options. But we're into futures now, and there's a good reason for that. Futures, they don't move like options. There's no Greeks. You don't have to worry about losing any money on your contracts from time decay, because time decay is something that just annihilates your contracts if you don't know how to play options correctly, especially when you're trading in indices. So you definitely want to trade to your risk tolerance, find something that works for you that you can build consistency off of, find your edge, and find a good setup that you like, back test it, repeat the process over and over and over and over again every single day. Capitalize off your wins and learn from your mistakes. Losing and learning from your mistakes is a good thing in trading. It's looked at as really bad, but that's the only way you can learn. And losses will happen even when you are to that point. You always take losses. Professional traders that are actually consistent take losses. It's just about how you handle those losses, and how you bounce back. So, just a little advice for anybody new coming in, or really that's why we made this channel, is to help people that haven't traded before or are starting to trade, build consistency and find their edge, and make money outside of their 9-to-5 job, and potentially make this a full-time job. We always preach multiple sources of income, so we don't recommend you quit your job to trade, but if you get to a certain point where you are consistent enough and you know you can handle your emotions in times of drawdown, go all in. That's your dream, go all in. I don't see why not. But having a 9-to-5 is not a bad thing. It's good to have some, insurance that you don't have to pay for. It's good to have some of the benefits that come with having a 9-to-5. It's something to do in the day. If you're not to a certain point in your life where you can just, spend money and take the day off, you might as well just go to work anyway. You have nothing else to do, so. But basically, we're just trending today. We're trending up. The market's kind of choppy overall. SPY is trending up. Um, since we already had our setup in the morning, we're not really looking for anything else because I missed it. I didn't hop on stream early enough. I had some technical difficulties I had to fix on the computer to get it to even stream like this, so I had to fix that in the meantime. So this will be a shorter one, but this is basically my day to day. This is what I do every single day, or at least every trading day. So I might as well stream it. Looks like Google is carrying us right off open. So that's what pushed us at open. We got SMCI pushing at open. Microsoft pushing at open. Apple ripping at open. Yeah, that's why we were ripping at open today. Definitely need to get another phone. Not really getting a good move out of here. It's looking like we're getting a bit toppy. Like we're showing some buy-in exhaustion now. But this could be the lower high we put in. This could be a lower high. I would say 531.02, 531. Break and close under. That's the break of the trend. We'll probably break under that, or we'll get a move under that if we do get down there. But if we bounce here, we could see a continuation up, just because we're in an uptrend. If we get a sell back into 530, that would be crazy. Getting a bounce here. connection is excellent because we're hardwired into that motherfucker. That's what's up. We have great connection because we are now hardwired into the Wi-Fi. So the stream will be on point. There will be no really delays. And then for me, for the charts, we're getting pretty real-time data. It's just like a millionth of seconds. It's not really like a huge, like, couple second difference or nothing. It's like milliseconds, so you won't really notice it. But I like the fastest data possible. So even if it's a millisecond, like, I'll take it. It helps my entries, and it's just better to be able to see the action real time. So, like, within milliseconds. So if we can cut any milliseconds off, period, like, that's cool. Doesn't make much of it. It's not going to make you a great trader just by cutting your time down or nothing like that. Because you can trade just fine off of, a wireless. There's nothing wrong with that, or off your phone. But if you have a station like this, I don't see any reason why not to hardwire to your internet. You might as well. And usually see if you have if it's a gaming PC as well, you can, now you're hardwired in. Now you have great Wi-Fi. Very low ping, and that's what you want. That's what you want. lot of nothing, man. Whole lot of freaking nothing. Shit. So basically, y'all, We are 8-8. We've had 8 wins in a row for since Monday. So we've been on a 8 win streak. That's insane. Absolutely insane. Now, mind you, this win streak will come to an end. Could be this week, could be tomorrow, could be today, it could be next week. But eventually, there's streaks of wins and losses, so we kind of just have to go with it. This month has been a great month. It really has. May's been a great month. April was an okay month. March was a tougher month for sure, for me anyway. January was pretty good. February was decent, and that's when it started to get tough towards the end of February. I've been noticing for my setup specifically, at least on this year, that the last week or two of the month is usually choppier. We start getting choppier towards the end of the month, and then once we make a new month, we start actually moving. It's all about adapting, really. You just want to notice patterns. Like, we are pattern recognition beings, damn near. We notice patterns. So, and that could be patterns with anything. It could be patterns in relationships, trading. It could be patterns in day-to-day life. Like when you're driving and you see the same people at the same time every single day. That's a pattern. But we're wired to see patterns. So when you see stuff like that in the market, definitely do not deny what you're seeing. Like if you look on the higher time frame on hourly on SPY, if we're trending up, you can't deny the fact that we're trending up. You can clearly see it. The pattern's there. We're making higher highs and higher lows. You can clearly see that. Now, if you're trading intraday, so intraday would mean the day of or today. So day to day, intraday trading. So what we're doing day trading. You want to be able to look at the higher time frames, see what the overall sentiment is, and then gather a bias for both sides. So if we move to the upside, why could we move to the upside? What levels are there? What are the EMAs looking like? Are we diverging or are we converging? We're making higher highs, higher lows, lower highs, lower lows. What are we doing on the day? And that can kind of determine your bias and what you trade. You just gotta you gotta be on the charts every single day. You have to be willing to be wrong. So this is like your first year. You have to be willing to get on the charts every day. You have to be willing to be wrong. You have to be willing to paper trade, so fake money until you can get your setup down, get your strategy down, get comfortable with real money. Start trading real money, and then start working on building consistency with real money. And it's the same process. So that's kind of how what you want to do. Obviously, you need to find your broker. You need to figure out whether you're going to use TradingView or TrendSpider. These things you need to figure out if you want to get into this, and you want to do it quick. The market's open every single day, so don't say I'm going to start tomorrow, I'm going to start next week. The market's open every single day. You could be putting in a couple minutes on the charts, looking at the charts. What are they doing? What do I notice here? What do I notice there? And that over time that builds up. But if you just look at it here and then you look at it there on a different day, next week, next month, you're never ever going to start this. You're never ever going to be successful doing that. You're also not going to be successful just thinking you know everything either, because you don't know shit. That's just how it is, and that's the harsh reality of learning anything you don't know, or you think it's easy. It's not easy. It may appear easy because you can click 2 buttons and make money or lose money, but to actually be consistent is whole nother ball game. To actually come in every single day and make or lose money and be able to journal, control your emotions, and advance to the next day. Live to trade another day. That's all this is. Now, like, the goal isn't to trade our entire life, but the goal is to come into the markets for a period of time, make as much money as we possibly can, and then be done. So, because the longer you're in the markets, the more money you're going to lose. And that goes for every day, that goes for a long term. Whenever you're in the markets, you're prone to losing money. You're risking capital, you're risking mental capital, you're risking everything, So, you just need to come in during the week with a clear head. Over the weekend, you definitely want to do something. Get outside, fucking go to the beach. You need to get out and do something to de-stress and to detach your mind from trading for a while. Even if you feel like detaching your mind from trading isn't going to progress you forward or backward, or you think it's not going to progress you forward by sitting here and thinking about it all the damn time, it's not going to do anything for you. All it's doing is stressing you out more, and you're not even in the market. So, leave it on the screens. Go live your life. Do what you got to do. Go take your girlfriend somewhere nice. Go take your dad somewhere nice. Go take your grandpa, grandma, mom, sister, siblings. Go do something. You definitely need to detach from this, because this is a stressful thing we're doing. We are risking capital. We're risking our ego. We're risking pretty much those two things: your ego and your capital. Your ego is a big one, because for one, you're not going to be able to have one here because the market will humble you real fast. And then two, we're playing with money here. So, money equals emotions. We need money to live our day-to-day life, to pay our bills, to go do things that we want to do, to invest for our future. We need money for a lot of different things. So, you can see why it's an emotional factor. Tying into that, this is not also get rich quick at all. A lot of us think it is, and it's okay to have that feeling that it's get rich quick. Like, you can get rich off this. It's just going to take time and consistency to get there, just like any other craft. So, you don't get a six-pack in a week. Take it like that. You don't get a six-pack in a week, but when you do get one, it's very rewarding to have one, right? So, that's tied hand in hand into kind of what we're doing. And we also promote fitness. Like, we want people to be working out outside of what they're doing, because that essentially builds discipline. It de-stresses you. It's good for your body. It's healthy. We want to make sure we're doing things that progress us forward, not just one thing. We need to get small wins every single day in different things, and then those add up over time. And you always want to be hungry for more. Like, there's always more to get. Always. It may not seem like that, but there's always more to get. Always. So, just a little lesson for the day. Just a little rant, little lesson. And, we just want to be mindful of that. Excuse me. Yeah, I would not short today. Like, for this case, I wouldn't even short above pre-market high, period. I would only be playing longs. Like, I'm only playing where we're at on the chart. And it makes sense in my head. It's harder to explain, because what makes sense in my head might not make sense in your head. So me sitting here and trying to explain it to you, you're not really going to get the point of what I'm talking about, nor are you going to really understand what I'm thinking. So it's kind of hard to explain. But if we're above something, right, let's just say in general, we're above something. We're above a certain threshold. We're not sitting in the middle now, and we're not below the threshold, right? We're above it. Why would you ever want to believe it's going to go lower if we're above that middle threshold? If we're above that middle threshold, that means that we're probably going to go higher, right? If we're below that threshold, we're probably going to go lower because we're falling. So we kind of want we want to play the trend. The trend is your friend. So until the market gives you a reason not to follow the trend anymore, as in a break of structure, or we start breaking back into that middle threshold between that pre-market high and low, there's no reason to short. Your risk, you can catch great moves like that. I'm not saying you can't, but it's a riskier trade and it's a lower probability if we come back down. Now, if we come back down and we bounce right back out of it, you can play that, and that'll be a good ass play because that's showing you that buyers are still present, or whoever's pushing whatever this is up is still present to push this up more. So, the same thing goes for down. Are we going to sell off more? Or are we going to break back into that middle threshold? And then we'd be wrong in that case because that's showing us we could have a reversal or we're going to chop. So we want to stay away from those two things. Obviously, a reversal means we're going to lose. Chop means we have to sit in a trade longer. And if it's a loss, then we just sat in a trade for 3 hours and lost. So it's like, that's where the mental capital and emotions get used up the most, is when you're waiting in between buying and selling and evaluating your position, seeing whether or not you should get in or out. You're always going to have those thoughts. So that's why I always set my profit target and my stop, and I can do that comfortably with futures because there's no time decay. So if we don't move anywhere on the chart, we don't hit either of my targets, I'm still in, and I'm not losing money on my contracts. So I prefer futures. Futures is way better. In my solid opinion, I can make more with futures, and I can build more consistency off of that because I know at this point in the chart I'm making this, and at this point on the chart I'm losing this. And I know that as soon as I get in, based on how many contracts I'm getting, and that's it. So if I'm grabbing 2 contracts, a 50-cent move on SPY or ES, well, it would be a $5 move on ES, I'm making $500. So if I have 1 contract, a 50-cent move would be $250. So each contract for a 50-cent move on SPY, a $5 move on ES would be $250 for the E-mini. Because I don't do micros. I like to keep it nice and simple. And eventually I might do micros just to start scaling out of positions and holding runners. But that's something I have to work on by myself. And kind of figure out where I'm at. Because right now on my PAs, I'm trying to build a cushion on my account. So I'm not taking a payout. I'm trying to build like a $53,000 or $54,000 cushion. So $4,000 cushion. And then that month that I'm at that mark, I'll start trading again. And then if I can get like to 56, I'll take out a payout. But I want my threshold to be 54K. So I have $4,000 worth of cushion. And that would be like 8 trades in a row that I could lose without blowing my account and having to restart. And usually I won't ever see 8 losses in a row. The most I've ever seen losses-wise in a row, I believe was 4. So, and that's on a choppy day. If I can recognize the chop, then I can stay away from, that. Usually in those days are on Mondays or Fridays is usually when I'll have the most losses because we're usually choppier on those days. Because a lot of contracts people are selling their positions out. People are buying their positions for the week, for the next week, and that kind of just creates chop in the market because we're not really going anywhere because everyone's setting up for that next week or offloading from the week before and loading up for the week. So, and that's big money. So obviously we don't know who's loading up. We don't know what's going on. We just see the price action. It's choppy. Indecisiveness. We don't have any momentum one way. So it's kind of like we can gauge what we want to play, or if we want to play, or if we even want to trade based on what the chart's telling us. Chart tells us not to trade, then we're not fucking trading. It's that simple. Chart gives us a signal. The chart's setting up for a signal, then we can get ready and then enter. But we don't want to be trading every single day if we don't have to. If there's no trade, then we don't trade. No setup, no trade. No level, no trade. I'm going to play off levels because those are areas of liquidity, areas of interest. It's an area where buyers and sellers were fighting. So that would be an area where you could find if there was aggressive selling or aggressive buying, and then that could happen again based off that pattern of recognizing, okay, well, prior to that, we've completely fallen off the last 2 times with nice momentum. If we can come up and show strength on this rejection, then I would like to play it. If we just don't show any strength and we're showing seller exhaustion, then we could break right through it and play the upside. You just got to read the market, read what the price action's telling you, if there's any value. Level 2, big orders. You want to watch the overall market. If Apple and Google and Nvidia is pushing, and SPY is also pushing, then that could be a great indicator for you to get in the longs or calls because the market's pushing. If we get a little pullback in the market, it's a better entry for you. Because they're trending. So you want to play the trend. You want to play what the overall market's doing, because if we're trading, if we're pretty much trading the overall market, which is SPY or ES, then we want to know what the overall market's doing. That way we can figure out kind of what could happen, what it's setting up, what could be a leading factor in the market. Because there's some days where like Google would be pushing, and then SPY's following Google, but the whole market's falling. But Google's carrying the market, or Apple's carrying the market. So you can also use that as divergence for playing like puts. If SPY's pushing up, but Nvidia's falling, well, that's divergence. You can play the puts on Nvidia when SPY's pushing up. So if SPY ends up coming down, that's just going to give you more confluence to your Nvidia puts, because if SPY starts to fall and Nvidia's falling, but the whole market's pushing, then that could give it some gas, and you could capitalize off that position. Just made all-time highs on SPY, so we'll probably get a sell. probably get a sell above all-time highs. If we don't get a sell above all-time highs, and we stay strong, we could end up pushing. Um, if we don't get a gnarly sell here, because this would be an area where you would see a bunch of sellers because it's all-time highs. If it's an all-time high, that means sellers were present there at that all-time high, obviously, because it wouldn't be an all-time high if sellers didn't step in. So just use the common sense, you know. That's kind of how you have to read the market. It's just common sense. If we get to a high on the day, that's telling you that sellers didn't let us push or let buyers push the price up anymore, obviously, because sellers stepped in. That's the high of the day, just like the low of the day. So if a lot of sellers step in at this all-time high area, are already still there with orders, then we're going to sell off. If there are no sell orders in that area, then buyers are going to buy it up. If there are not enough sell orders, should I say, because there has to be sell orders there anyway for the price to push up, because someone has to take the other side of a buy order. There has to be someone on the other side of your trade. So it's just one side has more strength than the other side because there are more buyers than sellers, or more sellers than buyers. So there's more supply, or there's more demand at that area that either pushes us up or brings us down to an area where buyers want to step in or sellers want to step in if we're going up. Because all selling is people offloading their positions. Like, you have to buy low and sell high on shares and equities. You have to, the market has to go somewhere, and there has to be orders at that somewhere for it to go somewhere else. So it's just an auction house at the end of the day. The market's just an auction house. People buying and selling. One side gets stronger than the other, that's where we're going. If they're in equilibrium, then we chop. Or we range. Just depends on where we're at in the chart, intraday, long term. We could be in a range on the long term, or on the hourly or the 4 hour, or we could be in a range on the daily, or we could be in a range in the 5 minute on the day. It just depends on you got to pay attention to those things.